not a test. This is your emergency broadcast system announcing the commencement.
Everybody lock themselves up inside their house. The coronavirus.
Nobody come out. Coronavirus.
The lockdown has
in the
begun.
streets and announcing to the United States of America. If you want to
not leave your house.
March 2020.
March 25, 2020. Welcome to the podcast, guys. It's week 2. I have already eaten my dog and my cat. I ran out of food and toilet paper. I am scared. Somebody hold me. Somebody hold me, please. Thank you guys for listening once again. We are back. We are doing 2 this week because we are crazy like that. Thank you to our sponsors, Alpaca Chicken, delivering in the Raleigh-Durham area now. You know, we're adapting with the move, man. You know,
right.
if nobody wants to leave the house, Alpaca will come right to you.
That's right.
At Nation Homes, if you want to get any renovations done in your house, Nation Homes is where you want to go. And if you want to buy clothes on eBay, okay, where do you go? BlueBetsyBoutique.com. That's where it's at. We have a very special guest today, our friend Brady. We will keep the last name secret just in case he decides to go a little bit, you know, off the thing. You don't want to protect his future career. Yeah, his identity needs to be secret. If you want me to blur that out later, let me know, okay? And the friends of the podcast, guys, thank you so much for continuing listening to us. We love that you guys do and you give me comments and things like that. I really appreciate that. Thank you, Corey Harpin, #1 listener. Evan Baxter, man, you're the man. I haven't heard from you in a while, but I never do, you silent bastard. And Bruce from the Big Apple, brother. Appreciate you listening too. We have Nacho, and then a bunch of girls that somebody here has listened to the podcast.
Nice.
I don't want to talk about that. It was somebody else. But anyways, on that note, you guys ready to get started?
Let's do it.
Let's do it. Bracket. So, Brady, thank you for being here today, man.
Thank you, man.
You look like you are not doing well. I see you're like you have a beer. What you're letting yourself go? Have you left the house this whole time?
You know, I made a couple grocery store runs. Other than that, I'm letting the beard grow, taking advantage of this. Taking advantage of this time, man.
Yeah,
from home.
Are you scared of what's happening right now? Are you panicking? What do you think is going to happen?
I am excited about what's happening with our markets because I think it's going to open up a good buying opportunity. A little nervous about the short-term impacts on the economy and how it's going to impact like individuals, but optimistic about the long-term outlook.
You're breaking up a little bit. We'll make it work.
Yeah.
You think that? So, from what I understand, is it's a good time to invest. Is that what you're saying? You're excited about what's happening with the markets?
I think a lot of companies are going on sale, right? So we've got all these companies that are trading. A lot of different companies are going on sale. Warren Buffett calls it the 1-2 punch. We had an oil war going on between Saudi Arabia and Russia, and then we've got this COVID-19 pandemic that's sweeping across the world. So between those two things, people are very emotional, and it's caused the markets to dip down. But the valuation and the true value of these companies is not actually that much less. Do we really think in 5 years that they're going to keep, oil prices artificially low, or do we really think that that this is going to be a pandemic, long-term pandemic? Like, it's going to last a season and it's going to be over. So it's a great time to buy.
Really? Because that's the biggest thing on everyone's mind, right? Like, I never even thought about investing in the market before. And I have put $1,000 into an E-Trade account already with that idea that like everything's going to the shithole. Everything's going down, low. And if you buy, then it's just going to go up and you're going to make a lot of money, right? That's the idea behind it. After that, I realized that there's way more to that. When you I put $1,000 in there, now it's sitting there. I haven't invested it on anything yet, right? Because it's way more complicated. You always see it on TV or whatever, like just buy Apple stock or buy this thing that is going to blow up. But like, okay, so if you are going to take advantage of that, where will you be putting your money at right now?
So I think there's a lot of risk in buying like individual companies if you don't know how to evaluate them. like run through some basic formulas and figure out what the true value of a company is. So I see very little risk buying an indexed ETF of the market and then riding the wave back up. So there's a lot of different investing strategies. One of them is called dollar cost averaging. But if you dollar cost average the market as it comes down, you're going to win big in a few years. It's just going to happen. In 5 years, you're going to have a lot more than what you've put in, and it's because people are emotional. Markets in the economy, it's a behavior more so than a true valuation of these companies.
Martin told me he was going to put $1,000 in the market just to, just to play around with it. And I was telling him that I think that's a great idea. But he told me this probably, Martin, like 10 days ago, maybe 2 weeks ago?
I still haven't done it.
And no, but I told him, I think that's a great idea, man. But I think you should wait just a little bit because imagine 10 days ago, 2 weeks ago, we were just barely scratching the surface. So I think it's going to get down a little bit lower and a little bit lower as things, I think it came up a little bit, right? And then I think it's dipped down again today. So
for sure.
I think it's going to dip down a little bit more, and then that's when the time to buy is. But nobody really knows when is that low going to be, right?
That's right. Like sometimes there's a famous saying, bottom fishing is the most expensive sport. Because you never know when you're at the bottom. Yeah, bottom fishing is the most expensive sport. Fishing. Yeah. So you never know when the market's going to bottom out before it starts going up again. So that's why like dollar cost averaging is so great. Because if you plan to invest $1,000, invest $200 a week until you hit what you believe is going to be the bottom, and then ride that average. And that's going to greatly reduce your risk, and it's going to allow you to capture gains in a safer way.
But that cost average is more on individual companies, or can you do that like on an index?
You can do it on an index, man. Just like the Dow Jones is an index.
Mm-hmm.
So you can do it on an index. You can do it on the S&P. You can do it on large cap funds.
See, you told me that before, right? We had a conversation before the podcast, and you're like, yeah, the way to go is to invest on S&P 500, and S&P 500 is basically like the biggest companies in the world, right?
Go
ahead.
Yeah, it's a collection of 500 companies that are considered large and stable. They're all large companies, and they're all listed on the U.S. stock exchange. It's one of the most commonly followed indexes, and it's also considered to be kind of the best representation of the U.S. stock market.
That Dow Jones, you're saying, or
the S&P 500?
S&P 500. Okay.
So if I go on E-Trade and apparently like there's different S&P 500s based on the engine that you use, like whether it's E-Trade or whether it's whatever other name of them they have, and it's just like we're gonna gather like the biggest ones and they diversify it for you, and then you invest in that, and like the idea is that it's gonna go down and it's gonna go up, right? But I try to do that and I couldn't even figure out how to do that. Like I didn't find that, dude. Like, can anyone do it? Like, do you need a class? How does it work?
Yeah, I mean, you can just buy any. You can. It depends on the brokerage company you use. So if you're using E-Trade or Charles Schwab or T. Rowe Price, whatever brokerage company you have, they're going to have their own S&P 500 index. So you can just buy into it. And when you go in and you look at, you watch the news or you see that the Dow Jones or the S&P is up X% today and tomorrow, like it really is a good indication on how the overall market is doing. And by buying like 500 companies at one time, if one of them does bad and one of them does great, it just reduces your risk.
What's the minimum amount that somebody can put in there if they want to start just dabbling with that?
Yeah, so it would be it depends on what the share price would be, but I mean, you can start investing with $100, especially with a lot of these free brokerage accounts that don't charge to trade. So pretty much all of them do it now. I knew Charles Schwab was the first, and that's my preferred brokerage. But a lot of them do it.
So, Brandy, is this like an app you can download to your phone and just do it through the app, or?
Totally. Yeah, you can do it through the app.
What's the name of the app? So I can do it right now. I can just download it and look it
I mean,
up.
there's a bunch of different ones. Wealthfront, Robinhood, Charles Schwab is the one that I personally use, but they all do the same thing, right? They're considered discount brokerages, and it makes it very, very easy to buy and sell equities.
Okay.
Mm-hmm.
What's the
So
name
can
again? I
you-
better write it down. Oh, the one you use, and just in case.
Charles Schwab.
So dude, there's like, so yeah, it's super easy. As you just sign up. I did a different one, and it just takes like you connect it to your bank account. And it takes a couple of
Yeah.
days, and then you can move the money over. I moved $1,000, and I have it there. But what I'm saying is, I'm still a little bit confused. I'm sure that I have to like dig in a little bit deeper.
Mhm.
But it just I'm seeing the individual stocks. Like here's the Apple stock, and it's like $3,000. Like you can't just buy it with $1,000, right? I haven't seen that yet, but I guess I just have to look for where it says
Sure.
S&P 500. What is it called? What is that? What the S&P 500 is? What?
The best company.
You can just, yeah, if you
What is
just
the name
search,
of that? That's a group of things. What is that? Has a name, right?
it's an index fund. So you
Index fund.
Yeah, it's an index fund, and you want what they call an ETF, which is an exchange traded fund that's going to trade just like a stock does. It's going to trade. It's going to be very liquid, so it has a high level of liquidity, which means it's very easy to buy and sell. And you have the protection of being diversified across 500 different companies at one time.
Mm-hmm.
And then there's a win-win. So we're all going to be rich, right? I just want to put
yeah.
$1,000 in there,
And
and in 5 years I'm going to have hundreds of millions of dollars, right?
Yeah, especially if you continue to invest, your 401k or whatever work. If you have a Roth IRA or a traditional IRA set up through your job, just continue to put whatever percent you can towards that, because that is dollar cost averaging. It's the same concept, but you're not necessarily working the down curve. You're working it over the long term, but you're going to see a tremendous amount of growth just from using this strategy, whether it's for long-term retirement or you just want to ride this market correction and take advantage of a lot of really emotional people during the corona pandemic and the oil war. So,
but what if you were trying to do like some crazy moves, right? If that what you're telling us is probably like the most sensitive thing to do.
Yeah.
And it's probably going to make you some money, but not necessarily. Like, what do you see? Best case scenario, you make what, 45%. So if I put $1,000 in there, in 5 years, I made 45% off of that, right? Like that would be an aggressive increase, right?
Or more. I mean, I think some of these companies are undervalued still. So there's like some yeah, go for it. What are you gonna say?
I was gonna say, so on a best case scenario, if I just invest $1,000 on the S&P 500, just like you're saying, right? Or even if I get it at the low, let's say it doubles or it triples, I made $3,000 in 5 years, right?
Sure.
So either I gotta be willing to put a crap ton more money in there, or I need to invest on something more crazy.
Higher
aggressive.
risk, higher reward. Higher risk, higher reward. So
what is that high risk?
Well, there's a couple things you have to take a look at. What is your time objective? Depending on how much time you have to invest is going to determine what you can invest in. So if your investment window is 6 months, that's going to be you're going to have a totally different risk tolerance than if your window of time is 20 years. So that should be your first question. Like, what do you want to spend this money on, and when do you want it back? And then the second question is, how much risk can you afford? And I think that depends really on your current financial situation. Like, do you own your home? Not like mortgage, like, do you own your home? Like, is this discretionary cash? Right. If you own your home outright and then you have a lot more discretionary cash, I say go hard, man. You have a very high risk tolerance. If you lose a little bit, you have some time to make it up. Another thing is your age. Like, how old are you? If you're really young, if you lose some money, then you've got a long time to make that money back up. So you can be much more aggressive in how you invest. I can tell you,
if you're listening, don't invest, okay? Or invest very conservatively.
Yeah, I could give you some single stock picks, but I almost don't want to, because I don't want you guys to go buy into them and then
just do it, man. Be crazy, bro. I want to hear it.
or win.
What are you thinking? What are you thinking? Like something crazy? Like, I was thinking, here's my crazy idea. All right, Are this
Okay.
cruise ship? Are this cruise? This chips in the airlines? They're
Yeah.
gonna bounce back, right?
Oh yeah,
Dude,
absolutely.
Those things
Great
are low
idea.
as fuck, dude.
Here's the reality,
I mean-
right? Like, do we really think that people are not going to be flying on planes in 5 years?
Yeah,
Well,
right.
here's the thing,
Of course
Brady,
they are. Of course they are.
There's a chance that this is more of an apocalyptic thing than you think, bro.
Dude,
There's
but
a
here's
chance
the
this
thing.
shit kills us all.
Don't you also think the airlines are too big to fail? Like,
Well,
they're
absolutely.
signing $1 trillion, multi-trillion-dollar stimulus package, and there's protections in there for airlines. So
Yep.
literally, we're not going to let them go bankrupt. And in 5 years, they're going to be super strong. There's going to be more people flying than ever have before. And they might even take advantage of some of these lower oil prices if they stick around longer than the coronavirus scared us.
Okay, do you
Was
think,
that what you were thinking?
Just the fact that like a lot of people thinking like like what you're saying, like the market. Okay, these companies they went down very low, so this is a good opportunity to buy. I know a lot of people is thinking the same way, so we're probably gonna have like I don't know 100,000 people putting $1,000 there, but since there's so many people putting money here because they see okay in 5 years eventually it's gonna grow. Is it gonna be worth it because there's so many people putting in just a small portion? It's gonna be worth it the wait? Because if I put $1,000, I'm just gonna make $1,000 back in 5 years. That's you make way more than that.
Sure.
Or you
So
expecting to make at least $10,000
I guess-
out of the $1,000.
I guess what he's saying is there a downfall that a lot of people are thinking
Thinking the same
way,
thing.
and they're gonna be investing in that.
I think most people are emotional, right? So they react emotionally, and they're
They're
all
scared.
in they're all in different life stages. So a lot of these
Mhm.
people that are in their 60s and they have a bunch of stock in United Airlines, they're
They're
dumping it.
concerned. Yeah.
They're dumping it, and they're the ones that own the most shares because they've been buying United Airlines stock for 30 years. So
So
they're
they're thinking they can't wait another 5 years. They don't want to wait
Exactly.
another 5 years.
They
Well,
can't
wait,
afford it. They
let me
gotta
ask you
crawl off
something.
of that.
Is it the more money that people? How does that stock go down? Is it because people sell it, or is it so if a lot of people buy it, it goes up? Is that how it works?
Exactly. It's all
Mm.
about
Oh, that's what
volume.
it works.
Yeah, it's all
Then
about
Elias,
volume.
it makes so like if they're low, that means that not a lot of people have bought it, dude.
It means there's
Not
more
like-
people selling than are buying.
More people are selling and buying because people I think are looking
Our
at what's
draft-
are looking at what's happening and they're concerned of what's happening. There's so much uncertainty. They say, well, no, I'd rather sell and get out, and I'm
Well,
not going
the
to put
thing is,
money in
like,
there now.
Okay, buddy. Okay, so I'm trying to understand how kind of works. So it wouldn't be like a pyramid. So let's say a lot of people is jumping in. They throwing a bunch of money. More people is buying it. The market goes up. In order for me to get my money back, a lot of more people actually have to be buying the stock for able to. Or is the money that these companies are actually making, and they just share whatever they're making?
Sure. So there's one factor that we haven't talked about, and that's what we call institutional investors. So these are like the Merrill Lynches. These are like the big mutual funds, the
Mhm.
huge endowments that have hundreds of billions of dollars. These are major players, and just one of them can manipulate the price of a company. So
Mhm.
when their timeline is different than an individual investor's timeline is. So they owe their stakeholders a certain return year over year, and that's different than what the agility and the flexibility I have as an individual investor. So if they're owing their stakeholders a certain percent of gain or loss within a year, because they have to justify their really high fees, they will pull out of stocks that they don't think are going to grow at a certain percentage, and it's a perfect opportunity for us to jump in. And just the action of them pulling out dips the price down into a really attractive place where we can jump in.
So that's what's happening right now.
Yeah, the reality is individual investors are way more agile and flexible. If Warren Buffett buys a stock, something called the Buffett effect kicks in, and everybody else starts buying that stock. But because he moved first, he got the best price.
Mhm.
Ha!
Right.
That must be nice to be like that, dude. And you're always winning because no matter what you buy, people are gonna buy it, no matter if it's shit.
The people
That's
say
crazy.
it's impossible for him to lose money because as soon as he buys something, everyone else wants it.
So
Bro,
I'm
gonna go ahead and say everybody needs to buy. Everybody that's listening to this podcast, I'm very irresponsibly gonna say go buy Airlines and cruise ships right now. As much money as you have.
I don't know.
Put it all in there. Right?
I don't know about that. I probably
Right.
wouldn't recommend that, but
Why?
I just I think the long term, it depends on what your outlook is, right? So the reality is that some of these companies are not going to be able to
Come back?
maintain the same business structure that they have now, and that's going to be
Mm-hmm.
painful. A couple of things I think that are really helpful to look at when you're trying to determine where there's value is what I call a PE ratio.
Mhm.
And you can just Google name of company and then what their PE ratio is, and that is the price over earnings. So what the share price is, how much that share of that equity cost over how much that company earns per share. And they have those broken down by industry. And you can use this really simple ratio to determine like how valuable a company could be. Another thing to look at is a lot of equities pay out dividends. So dividends are really nice because you're getting a share of the profits on a regular basis outside of the growth or increased valuation of the stock. So if the stock goes up, a few percent year over year, that's great. If it goes down a few percent year over year, you're still making that dividend outside of the value of the stock.
Mm-hmm.
So the reality is like all these companies, like all the stock market is tanking. Like we've had the fastest 30% drop in the history of our modern markets. In 22 days, it dropped 30%. But all these companies are still paying out quarterly dividends. And if you own certain stocks that pay out high dividends, like utility stocks, you're getting a check every quarter outside of the value of the stock. And then if you go back and reinvest that dividend share and buy more while it's low, you're just going to make it out with a lot. In 5-10 years, you're going to be killing it.
How do you know which ones pays dividends? If that's what you, it seems like
Yeah.
that's the way to go.
Oh,
You're
for
almost
sure, man.
guaranteed, right?
Honestly, like there's something called like dividend investing, and it's identifying stocks that pay like 5% or more of their price in dividends. So if you buy a share for $20, then $4 they pay a $4 dividend a year. Like you're gonna get your money back in so many years. You can identify a whole group of stocks that do that. Now, one thing I will note is that there's a lot of different types of dividends. Sometimes they do special dividends, like Apple does. So sometimes Apple will have so much cash they don't know what to do with it, so they'll cut a special dividend to its shareholders.
Right.
And you also need to know that dividends can change. But you have the ability to go back and look at companies' track records and identify companies that increase their dividend every year or every couple years. Those are the real money winners because you know that they're invested in providing back additional value to their stakeholders.
So I looked up Carnival's PE ratio. So the minimum was 2.15 March 18th, 2020. The maximum was 30.38 in 2015. So it went from 30 to 2.
Low is better. Yeah,
Bye.
The average was 17. So you got a high of 30, low of 2, and average of 17.
Bro, it's gotta go up from 2.
The minimum right now is 2.15, which is March 18th. Today is 3.65.
Yep.
So what does that?
Could have been already $1, bro.
Clarification. A PE ratio is a snapshot in the past. So they're often based off of the last quarter's earnings. And you know what happened in last quarter? Carnival was doing great. This quarter is a whole different picture. But I mean, still you can see that they're considerably undervalued, probably to what they're going to be worth in 5 years.
Right. So
you need to buy car, bro.
Yeah, I mean, I went on a cruise. I've never taken cruises until like the last couple years that me and my wife took a couple. We took one Carnival cruise, and then we took a what was the other one? It wasn't Norwegian, Royal Caribbean cruise, and completely different. I feel Carnival was like more. It was a little bit cheaper, and it was more of a kind of like a party cruise. They just wanted you to keep going, and Royal Caribbean was a little more laid back, kind of let you do what your thing, a little bit more mature, I guess, crowd maybe. Anyways, but there was thousands. I mean, we're in the restaurant business, so it was just amazing how they feed and like the operations of these cruises. And it's like clockwork, man. These cruises are no joke. And apparently, there's just a huge cruise world. There's just so many different brands of cruises now. But I was like, I mean, I'm agreeing with Martin. I think cruises, airlines, these cruises are not going anywhere. You know, in my opinion, maybe Carnival. And even Carnival, I feel like they kept. You know, you see Shaq on there. You got the guy from Triple D. You know, the guy from Triple D, the guy with the blonde hair. What's his name?
Triple D.
Triple D, man. Diners, Driving, and Dives. Your boy.
Oh,
I know you're talking
that
about.
guy.
Okay, so the guy, your BFF. Yeah. So he has like he has like a Burger Shack place there, right? I mean, they have his name, his signature all over it, but he's on every Carnival cruise ship because they do like their burgers there. And, you know, you just have, I mean, it's just crazy the amount of food that people consume.
Here's the one thing I would say that I would lean more towards airlines than cruises, because this whole mess is brought up aside of cruises that I didn't know about until now, right?
Mhm.
Apparently, they're
Pollution.
the pollution is horrible, right? Not only that, right? So it's really bad for the environment. It's a petri dish for bacteria and viruses like this.
Mhm.
That's been a huge problem. So, like, whether there's a coronavirus or not, and this is stuff that has always been the case, but now is being publicized more and more.
Yeah.
And they abuse the employees because there's a little loophole that they use that when you sail off the shore,
you're
now
like
on
in no man's land.
international waters.
Right.
So, well, they don't pay taxes, which is good, right? They get to save all that, but there's no labor laws. So these guys are working like ridiculous hours. All of this is being exposed. I myself got turned off from going, and I really wanted to go to one, right? But after I heard all of this, that the only reason I'm hearing about this is because it's what's happening right now. I was a little turned off by that, and I feel like there would be, if one of them were to go down, would be because of like this publicity, this like negative thing that's happening with them. I would be more thinking that the airlines that has to be a thing.
Airlines is definitely a must. Just to go back to what you said on the cruises, man, I think that's all valid what you're saying. But I mean, Golden Corral and all these other buffets are still in business. But I think cruises allows people to go for a couple $100 to leave Florida and hit up like 2 or 3 countries or islands and be out there for 5 days, 4 or 5 days, and come back. So I think it's and the whole labor law thing, man, it's crazy. But we talked to like all the servers and people who are working there, and nobody's really complaining. Yeah, they work a hell of a lot of hours, but it's kind of like, all right, either I'm going to be in Pakistan or Bangladesh and have no kind of opportunity, or I can get here and do a contract for 8 months and work on the cruise. And a lot of people that we spoke to, they've been doing this for years and years and years. So, I mean,
it's opportunity that wasn't there for them before.
Right.
And the pollution thing is whatever.
The pollution thing is another thing that, I think it's coming up for sure more and more. But, and I think, there will be a time that they're going to say that they're going to come down. But at this point,
I'm just saying, like, if we go with this model that the economy is down right now, we're going through a tough situation, but a lot of this are going to get bailed out. I don't see the cruise ships getting bailed out, right? I see
the airlines being bailed out.
The airlines being bailed out. I don't know what the impact of a cruise line to an economy has to do, especially if they're getting foreign workers, and a lot of this is done in international waters. I don't know what the incentive of that is. Right. Brady, what? So we had to suck this ones out of you. What? Which other ones do you have? What do you think about the cruise ships, and what do you think about, like, what other ones do you think are like sort of in the same boat, or are those the two that you were thinking?
Oil.
Yeah, I think there's a lot of interesting things to look at when you're trying to figure out what you want to buy. I think one important thing is, like, look at companies and industries that you like and that you enjoy, because it makes it a little bit funner to dig down and understand, like, what their leadership is like, how much debt do they leverage, because sometimes when companies leverage too much debt, it means that they can be overvalued or have additional risk in play, possibly have cash flow problems in the future. So like these are all things that make it a little bit easier to look at. I mean, I can't necessarily give you, one or two companies because you're going to go out and buy them. I know you, Martine, but
Just do it, man. I'm not gonna do it, man. I don't have that much money. Just say it.
Yeah, exactly. I don't want you to lose what you do have.
What do you
But
think? Oh, damn, cold blooded. Rambeer's got a lot of money, man. He's gonna go buy him. What is it? Just say it. You thinking Toys R Us?
I don't think Toys R Us is a good
Kmart is where it's at, dude.
Why do you think that? I get it. I'm not gonna push anymore. I
Okay,
think that.
What industry would you say, Brady, for the listeners? Obviously, you cannot hold, and they cannot hold you to this, and you are not liable for anybody's
He's
poor
not
financial. You are not professional,
He's
unlicensed.
not
opinionator.
licensed.
Yeah, sure.
But I personally, what I was thinking was cruise lines, airplane, the airline industry, oil, because it's where it's at right now. Oil is another one that's going to bounce back. Can everything go electric? Yeah. Will it one day? I'm sure, but no time in anytime soon. And I don't think. What were some other ones that? What were some other industries that you think that would be?
So my favorite are really large companies
Mhm.
that are dipping in price because people are scared and nervous, but it's not going to affect what they're worth in 5 years.
Right.
So when you think about big companies, like tech companies, think about like Salesforce, right? It's a CRM software that a lot of companies use, and they've got recurring revenue, and they have a great, PE ratio, and or Coca-Cola, right? Johnson and Johnson, and some of these like companies that manufactured Clorox and Lysol, like they're doing great right now.
Oh
They're
yeah.
How
running
is
out and buying.
Salesforce dipping in price? Or you're saying as an example?
Just an example.
Because all these people are working from home. Salesforce got to be booming, bro.
Dude, tech companies, man, I think they are getting, pretty severely undervalued, and the reality is a lot of their revenue streams are not affected.
Mm-hmm.
Right. Also, people are selling them because they don't understand how they work.
Exactly. People are selling them because they want to get their money out. And the reality is, like, it's a great time to buy them.
Well, here's the thing, man. If the majority of people invest on this S&P 500s, which is a group of things, right? Then when you take it out, you're taking it out of not necessarily what makes sense. You're just taking it out of the S&P 500, which is a group of companies. So it's going to affect it to a certain level. I can see how that would affect. But I think software right now is the way to go. Everybody's forced to work from home. People are doing video chats. People are, that should be what is booming right now.
Big time.
So that's interesting to hear that. I'm going to go check out Salesforce and I'm going to buy lots of it because you said it, Brady, and I'm going to hold you accountable for it.
Go take a look at Zoom Video Communications.
Big
prices right now.
They're low.
Go look at what they've done over the last month. They've actually gone up, and the reality is, like, with all these people that are working from home,
they're studying from home.
Yeah, they are going up in price. So, is that kind of more speculation and less like true valuation? Probably. The reality is that, like, a lot of people end up picking companies based on speculation and less on the fundamentals of what their true value is.
Well, what are the fundamentals? Nobody really knows what that is. What are you supposed to go study, like the CEO and see what he ate for lunch, and figure out what are some of the fundamentals? If I wanted to be a pure mathematical man,
sure.
I have a hard time saying that mathematical. How would you approach that?
So I think I would look at value ratios. So it's very, very simple. The first one we talked about is PE ratio, so price to earnings. Another one I would look at is earnings growth. So seeing how there's earnings growth over time, so the actual increase in their profits over time. Another one is a PEG ratio, so price, earnings, and growth ratio combined into one. There's another one called a P over BV ratio, or price to book ratio. and it really focuses on measuring a stock's worth, kind of in a different way. And then we talked about dividends already. There's a dividend yield ratio. Like once you learn how to run these ratios, and you can find them so easy. And today with internet, you go to Morningstar, you go to your Charles Schwab account, they give all of these numbers to you. So you can actually see the value of these companies, and they do all the math for you. You just look at the ratios, and then understanding what they mean relative to what the industry is. You can make a buying decision or even set a target buy price, and pretty easily once you just learn these simple.
But you're looking at historical data, and you're looking at, okay, here's where the number is today. How does that make me understand what it's going to be tomorrow? I'm not. I guess if you see it like it's gone up in the last few years, but now is the whole idea of investing now is because it's crazy times. There's no historical. There hasn't been a coronavirus before.
Right? Yeah, I think there hasn't been a coronavirus, but you're looking at that's the only tool that you have, right? Just trends. So,
Right.
Like that's the only thing you can do. I mean, you can look back at 2007, 2008. What happened? Why did it dip? And then what happened? Before that, or what happened just very recently, or what happened 9/11. But I was talking about PE. I looked up Apple's. So you remember what Carnival's PE today was like 3.8 or something. So Apple right now is 19.45. The minimum was 9.9. The maximum was 25. Average of 16. So it's
they're not too low.
The average, Carnival's average was 17. Apple's is 16. But today, Carnival's is 3.8. Right today, Apple's is 19.5.
Yeah, it's a big difference. And you'll notice that like they kind of maybe a better way to compare them is with other companies in the same industry.
In the same industry,
Yeah, if you were to compare Carnival's PE ratio to Norwegian or some of these others that you mentioned, like that's going to give you a much better idea. And then also, like, you've been on, a couple different cruises, kind of what you like better and why you like it better. There's kind of a brand value. Sometimes, some people say that Coke is better than Pepsi, and there's that perception that the brand is worth more. Therefore, it can warrant a higher PE ratio.
I'm getting mixed information here because I feel like part of what you're saying is let's look at the numbers. Let's see how those numbers are behaving. Understand the numbers, understand the math, right? And then the other part, like what you just said, is like understand the emotion or like where like what people may do, which people are very unpredictable, right? And I feel like the second one is where you make big money if you have the intuition, right?
Sure.
In the first one, you can make steady money over a long period of time, right?
I think you're onto something here, Martin. So the idea that the risk changes depending on how you, whether you're speculating or not. So when you take emotion and you speculate, that's going to have a higher return and a much higher risk. But if you take data over long periods of time, that's going to be a lot lower risk, and you're going to get a lower return.
Yeah. So I guess the speculation is a little bit like gambling, but it's almost like you think but you don't really know, right?
Dude,
like I'll give you an example.
Exactly like gambling. Speculation is exactly like it.
But here's what pisses me off, because I feel like that if you look back, it was in front of your face the whole time, right? So I was into this guy that was doing YouTube channels in Japan. This was 2 months ago, right? 2 months ago.
When you say you're into this guy, what do you mean you're into this guy?
Like he was cute.
How deep were you into him?
I mean, whatever, man. I don't want to talk about it.
Okay.
No, I'm kidding.
It brings back.
I got it.
He left you.
Let me finish this because this is interesting because it goes along with this, right? So it's just so many things seem clear, but they're not, right? So I was watching this man in Japan. He lives in Japan. He's a British guy, and he has a YouTube channel. This was 2 months ago. I could see him giving me a day in a Japanese live and talking about the coronavirus, which happened way before it did here.
Right.
way before, like 2 months, 3 months ago. I don't know. It seemed like a long time. And already he was blogging about how the toilet paper was out. Everybody was buying toilet paper. And I'm watching this video, so I'm thinking, no relation, no force, no vision of it, right? I'm just like, oh wow, they're buying all the toilet paper in Japan. Not even ever relating it to me. Like, I guess the example there it is like, why couldn't I have seen that connection and say like, yo, it's just a matter of time before it gets here, right? They haven't been able to contain it anywhere else. I think that toilet paper is going to run out. I should do some sort of, I mean, I don't know if I could have, but some sort of investment in the toilet paper industry, right? Like, I mean, like me of all people that was into that, I should have been able to see, oh, okay, that's one. So that was number one, right? Number two, the guns. I thought about buying a gun. It took me like 2 weeks to do it. I went to buy a gun, too late. It was all sold out. Was there an opportunity there too? The connection should have been easy, right? People are afraid they're going to buy guns, right? The third one, I wanted to cut my hair. I'm in the house. I can't go to the barber. I went to buy clippers. Guess what? Clippers are off the roof right now. You want to buy a clipper, they're sold out. They get there April 26th. Very expensive, more than normally. So like everything seems to be lined up, and I think the stock market works in the same idea, the same way, right? The intuition, but I guess it's very hard to make that connection because you can't control what people are going to be doing. Or you think you are, but you're not. So there's very much gamble in it. But the math aspect of it almost seems like you're just relying on historical data, which for historical data, things have to be consistent. And life is not always consistent. Well, the only thing that's consistent is the market is always going up because what you told me the one time, Brady, that, the whole purpose of this company is to make profit, right? So unless they go out of business, they will go up. But other than that, you don't know any other consistency. Like right now is a very inconsistent time. So going into historical data to me would seem like a mistake.
Because we're in it right now, right? Because we're in it.
Yeah, once this wave, you keep going. You got something here.
Yeah, I mean, because you're in it. So when you're in the mix, you're like panicking. You know how it is when you're panicking. You can't think right. You're not even thinking right. You're thinking, I need to go get toilet paper. I need to go get eggs. I need to get PB&J. Because calm down, right? You're in the mix. If you just take a step back and take a breather and say, all right, this will pass, just like 2007 and 2008 recession passed, just like 9/11 passed and people started flying again, just like anything else is temporary. But I think you're right. A lot of people are emotional and they're making decisions based on emotion, and they're just in the mix. So everything's just cloudy.
For sure.
The thing, sometimes I see is like, let me jump in here. When you see like, if you want to get good at something, you have to start. Sometimes we see, oh, it's a great opportunity right now to jump on the market, maybe buy this, buy that. But regardless of the opportunity right now on jumping on something, like if you want to invest in stocks, if you want to do something, I think you're going to get good at it by start practicing, right? And start making some investment, starting losing some money, making some money. And that's how you get good at practicing. I believe like whoever did it, I don't know, it's been doing it for 10 years. Probably they saw it coming, and many people probably did buy something on, I don't know, try to buy toilet paper or buy guns or clippers or whatever. Because they're in that movement. Like they see something and they actually, okay, that's
in their mindset.
So sometimes like we all have the same amount of opportunity. We all have muscle, hand. We all see and the things that you see. Bradley might don't see them. Ramir might don't see them, but you, Martin, you might see them. So it's just about, I guess it will be just start going like, okay, let's start investing. Right now they said the market is low. You start getting some information, but not just because it's low right now. Okay, it's a good opportunity, but then I guess keep doing it. It was going to make you good at. You might like just, and I guess taking the risk off. So like some people is like taking the risk, I guess, or investing on something. You have $1,000 just hanging out there. Okay, let's, like I heard Rambir saying it. I heard Brandy saying it. Okay, I have all this information in me. Okay, let me do something. Right now, I assume you guys hear, like I haven't thought about it, but I started hearing you guys talking about it. I'm like, okay, I got to get into this because it seems like it's a good time. It's a good opportunity to start buying stocks, to start like playing a little bit and not just put some money right now and just walk away. it would be something like it's something good to start learning about it. So I guess, and there's a bunch of things I guess you can mix when you can. I guess you can buy depending on what you hear on the news. I guess you can buy depending on what you hear around. Like they were saying, like, you like this cruise? Yeah, I checked them out. It was good. It's a good company. All right, I tested. I guess I'm going to invest on it because I think it's I can rely on it. I think they're going to keep doing good, so I'm going to invest in that company. I guess there's so many different facts that you can, I guess, be strong at, or you can combine all of them, or you can just focus on one. So like depends whatever the news says, depends what I'm going to be buying. I guess if Trump says right now, oh, Apple is the best company right now to buy, a bunch of people is going to go buy. So I guess there will be a good chance to go buy. It just depends on what you heard someone saying. So I guess the best thing to do is like to jump in, start practicing, put a couple $100 just to see what happened, and just to start seeing some numbers coming out of your account, coming inside your account, and I think that's what's going to make you good at doing this. How long did it, Bradley? How long did it took you to start being good and to start actually seeing something? I'm pretty sure it wasn't like
Sure.
from 2 weeks. It was like probably a couple months or maybe a couple years. You're like, okay, I start getting it right. I
And you
start
feel
getting it.
comfortable that you feel it. It's making sense.
I would say 2 years, honestly. Like, it took me a couple of years to where I feel really good. I still get nervous before I make a buying decision, but the first couple of years, I feel like I learned a lot. And I think you were onto something, Elias, when you said that you just got to start, right? There's something that everyone that's made millions of dollars investing, they all have one thing in common. They invested. Right? They all invested in the stock market. So if you're going to make millions of dollars in the stock market, you got to invest. You can't talk about it. You can't think about it. Learn a little bit and put some money in there.
Sorry,
you
Brad.
gotta start.
Mark Cuban says, I think it's Mark Cuban. Perfectionism is the enemy to profitability. Some people are very analytical. They want to make sure it's right. They want to make sure all the stars aligned, and that's when they pull the trigger. By the time you do that, it's too late. It's way too late. So sometimes you got to pull the trigger and then aim after the fact, and just readjust and pivot as the market as you need to. But so sorry. Go ahead. Keep going, Brady.
No, I mean, you're spot on. I think you got something here, right? I think it's okay to make. I wouldn't take out a bunch of loans and then go put all your money in on Apple stock tomorrow, right? But it's okay. It's okay to start, with some money and a small bit of money, and then start investing over time. And you're going to learn more and more about what works and what doesn't work. And as you kind of build up your
portfolio,
your skills and your portfolio, like you're in the long run, you're going to win. Because just like I've told Martine this before, like, all of these companies that are trading right now, they exist for one purpose: to increase and grow and produce for their shareholders, right? Their number one reason for existence is to produce a healthy profit.
Bottom line.
It's why the CEO was hired by the board. It's why the board was put in place. It's why stockholders have a stockholder meeting and vote people in every year. It's why people buy the stock. It's why the valuation is there. And so, because they exist to turn a profit to their shareholders, they're gonna turn a profit to their shareholders over the long term. And if they don't do it well, they're gonna go out of business. So, like, I think in the long run, buying the 500 biggest companies in the market, you're gonna win big, especially if you take advantage of the market conditions right now.
So here's a question that we've talked about in the past. People's fear of losing money, because you're going to learn when your money's in there. It's affecting your pocket. You're going to learn. But if you just go out and buy Apple shares and Apple files bankruptcy, then you lose your money. But if you put money in the S&P as an index fund and you're investing over 500 companies, and Carnival is one of those, or Carnival is one of those companies, for example, Carnival goes bankruptcy, you're not going to lose that money. Is that correct?
You're right. You're averaged out, right? Like you've spread your risk out over 500 incredibly large companies. So if something horrible happens to one of them and they go out of business, then that's only one of the 500. And then another company comes in and takes its place.
Mm-hmm.
Right? And it's
Okay.
another large, viable company. And if one of them does very, very well, you get to take advantage of that as well. And the reality is these companies are so big that in many ways they have so much value just in the offices they own and the revenue streams that they have. They're all diversified within themselves. So
Right.
it's just a really safe way to go in the long term.
But you make
Oh, go for it.
you get a higher. You could possibly get a higher return if you go with an individual
Oh, for sure.
individual company versus going with a safer bet over 500 and get a less return. Would you agree?
Oh, absolutely. You could make a much higher return by buying an individual company, and you can make a much worse return by buying an individual company.
Right.
Here's an example: Berkshire Hathaway. Right.
Mm-hmm.
It's the company, the holding company that Warren Buffett owns.
Right.
That has consistently outperformed the market. Now, I don't know what one of those shares go for. I might have to look it up to see, but it's like over $100,000
for one share. Oh my god!
for one share because he doesn't split it. Now there's class A's and there's two different versions. There's an A and there's a B, but like Berkshire Hathaway is a bunch of different companies that he has put together. And in a way it's indexed because he's managing it, but he owns companies like Brooks Running Shoes. He owns all kinds of stuff in there. He owns portions of Bank of America. Like he's put together a bunch of companies that he bought on sale when they were lowly priced, and he's holding them as they increase in value.
Mm-hmm.
Kind of like real estate. I don't know a ton about real estate. That's not my background. Maybe you guys have done a lot more with real estate, but they often say that the money is made at the buy. Same thing applies with equities. So when you're buying a stock, you're going to make the money when the stock is on sale. When the company is valued more than what the market perceives it's valued at, and you buy it, and then when you sell it when it's overvalued, that's where the money's at.
And that's why we're having this conversation now. That's why I feel like a lot of people are interested in purchasing now because it's low and you're going to be able to buy low. You're going to be able to buy at this time cheap.
Absolutely. The emotion is such a big part of it, right, guys? Because I feel like after this conversation it's fairly clear that we can pinpoint a couple of stocks that we feel pretty confident, each one of us, not because of what Brady said, so it's fine.
Right.
By everything he said. No, I'm just kidding. But we can all narrow it down to a couple companies that we feel relatively confident they're going to go up, right?
Mm-hmm.
I feel like, and that they are not going to go out of business in the next couple of years. But there's the emotional aspect of it, right? In the next couple of months or weeks, we may not be making the same amount of money we used to make a week ago in the same job. People may be temporarily laid off. People are feeling, anxiety by being at home. So that's where if you could think with a cold brain, or like a calculative brain, it would be a no-brainer to take that risk. It'd be like, let's buy some of the stocks. But I think the reason, because I'm trying to think like, why didn't people buy houses back when the economy went to shit back in the day, right?
They did, and they made a lot of money.
Some people did, but most of people that I know, like, right, they
did.
Right?
Because the reason why is because they didn't have money, and or banks weren't lending at the time, and they didn't have enough money to
only the people who had money. But okay, so in this case, we're leaving a part of the economy that was really good, right? So a lot of people have money,
right?
So do you see something similar happen? I mean, let's talk about that. Are the price of houses going to decline? Would you buy a house right now?
I think there's going to be some opportunities in business to purchase some businesses and just vacant spaces if you're looking to get into real estate spaces, commercial spaces. And I think there's going to be some opportunities with real estate for sure. We've been looking for a house for the last couple of weeks, and we're like, man, I can't believe like these houses are going for this much. And they were just, it was crazy, man. And
high or low?
High.
Oh, right now?
No. Like 2 weeks ago.
Oh,
right.
Okay.
Before 2 weeks, 2 weeks prior to where we are now. And I was like, man, like this is crazy. And then we're like, man, are we overpaying? And this has been going on for years in Raleigh. Martin, how long you been in your townhouse? I mean, in your house right now. I remember they had multiple offers. So it's been going on for over 3 years.
It would sell in like a day.
Right. So, or multiple offers. So now I've seen some houses, a lot of price reductions. I've just seen overall, I think there's going to be some opportunities because of what's happening across the globe. And I think small businesses are going to be affected. I mean, people who are used to making commissions and bonuses, and they counted that as their income. I think a lot of people are going to be affected. So a lot of people, I think that's going to calm.
But what I'm saying
down.
is that if you think of it in a calculative way, right? If you think of the idea of like, we're going to be okay, we're going to come out of this hole, then it would be a no-brainer. For example, I've been thinking about getting a bigger house now, right? Like I feel like I want a bigger house, right? And it's something that before this happened, it was sort of in the, let's look for a house, let's look for a good deal, let's look for something. Right now, the prices of houses are going to go down, most likely.
Mm-hmm.
I don't feel comfortable buying a house. Why? Because I don't know what's going to happen. I feel scared, right? I feel a little bit scared. Like, what if I lose my job? What if, like something happens? What if I don't have the money? So what I'm saying is that's the emotional part of it, right? So you have to really be aware of the emotional aspect and to be able to make a good decision and make money out of this, right? So, go ahead.
In this scenario, in somebody who has a house like yourself that wants to upgrade to another house, I think it's going to get there's going to be a good opportunity. I don't think it's going to be dirt cheap. I don't think it's going to be like back in the day, but I think you're going to get a substantial, maybe 30% cost savings. I think the tricky part is if you have to sell your house to go and buy this house.
Right.
Then that's the tricky part because you say, well, man, I'm not going to be able to I might get 30% less. Now, what I would recommend is always if you can rent your house and then you can go purchase, then you're good. I mean, and then I think it's a win-win personally because your house will go up in value and then you will be able to purchase in this house at a discounted rate. The hard part is when you have to sell that house.
Here's the other thing that I feel like all of us are sort of assuming, and we're not sure, is that this is going to be over in a couple of months.
Mm-hmm.
And then life is going to resume as normal. What if it fucking doesn't, guys? What if we're on this for a year? What if we, like,
okay, but look,
all of a sudden, like, we can't go outside? What, there's so many things. I mean, and we do have China and other countries that experienced it before us to know sort of in relation to how long it took for people to go through this, but we don't know how it's going to react here with the rate of obesity and other health issues that we may have that other countries that were affected did not have. Like, how is it going to affect us? So, like, everything that we're doing is speculative, right? So, which is the scary part of it. Like, should you invest? Maybe we should be holding on to every single penny we have
because you may need it.
You may need it, or maybe none of the money is going to matter because
that goes back to what we said initially. Like,
yeah, we're going crazy now.
Like finding the bottom. What'd you say? What do you say it was called, Brady? When you're looking for the bottom price.
Fishing is the most expensive sport. Bottom fishing is the most expensive.
Because you don't know. I mean, do I think it's going to get to that point where people are scrounging and breaking in your house to steal rice and beans? I don't think so. I think if it gets like that in the U.S., well, I think that. All right, if it gets like that in the U.S., I think globally, all hell is breaking loose. I mean, if people in the U.S. are breaking in people's houses for food, then I just think that in other countries they're far. I mean, people are eating each other at that point.
Elias, are you prepared to fight invaders if they come to your house?
The only thing I have is a bow with a couple of arrows, man. That's all I got.
Bow and arrow,
dude, I'm scared of you.
How about you, Brady? Are you prepared?
That probably gonna hurt a little bit more than a bullet, maybe, man. Imagine running away with an arrow on your back, man.
Yeah, dude.
That would suck, man.
I would way rather be shot by a gun than a bow and arrow.
Nothing like waking up in the middle of the night, grabbing your arrow and your bow, and getting ready.
in the dark.
I can just tell you right now, there's no way I'm going to Elias's house like ever, because I don't want him to mistake me for some like robber or something.
A food robber.
How about you, Brady? In any scenario that you see this being a scenario in which the whole government and economy falls down, and are you prepared to fight people and defend your family?
I don't see that being a possibility. Like
Of you defending your family?
of the entire.
Did I run super fast?
No, I can take care. I got that part. No, I don't see that being a realistic like outcome, but I think I could have things under control here.
Yeah.
Mexico
Mexico is very worried about right now. It's like, when are you guys going to build that wall? You know, they're like, you guys can stop building it now. You know,
you guys promised that wall. Get that daggone wall up already.
All of a sudden they want it.
Hey, you know how my thing was like, why did we never even think about this? Why did I didn't think about getting like a dozen clippers? Why didn't I think about getting stocking up on toilet paper and selling it?
Bidets went up through the roof too.
I don't think when you see things, or at least me personally, I don't know how you guys feel. When I see things in other countries, when I see things overseas, like you feel a certain like it sounds bad, I guess, certain safety, like that's over there. I feel for them. That sucks, but it's not here. When you hear that it's happening in the U.S., when you hear that it's happening in your city, in your county, I mean, nobody ever expected, dude, public schools and other even private schools to be closed for the rest of the year. I mean, that's crazy. People are saying that, schools closing for months. If you would have said this 3 weeks ago, no way.
Right.
But look, I mean,
historical times, bro.
Yeah,
it's crazy.
Big time.
I think that one of the things that helps you make the connections is something you guys already mentioned, is if you're into the stock market already. So we are buying the fire truck. We wanted to get a fire truck, but the place is already on fire. We're not into it, right? Like we are looking into stocks because we feel opportunity. But if we were already well versed, or we felt like, for example, Brady's experience is probably completely different than ours, right? We're like, I'm opening an E-Trade account and putting $1,000 in there just because I think that something's going to happen.
And Brady's selling.
If you had already taken the risk before, you would have a little more direction, and you would have a little more confidence and the balls to do it. Not to say that, this might not be the time to start, right? But I'm saying, like, it's good to be involved, right? Although I have heard from people that, the stock market is just simply something that it's a gambling thing. Nobody really knows what's happening on it. I've heard that in China, people look down on people that invest into the stock market because it's stupid. But I don't know. I think that being familiar, like right now, we're some guys that heard it's a good time to invest because shit is going down. But then when it gets to when it comes to it, it turns out it's a little bit more complicated than that. And I wish I would have done some before this,
Brady, how long have you been actively investing where you're active?
Sure. So I'd say probably 6 years.
6 years.
So,
damn.
Yeah. So I in grad school I studied corporate finance.
Mm-hmm.
So I have a little bit more of like the numbers background, and then there was a lot more. Honestly, I learned a lot more just from the internet than I did in grad school. But that's how I think most things in life go.
Mm-hmm.
Did you make any money in 2008 or when that?
No, 6 years ago you had been 2013, 2014 you started, right?
Yeah.
Longer than that. Never mind. Sorry.
So would you say you bought high and now you're kind of hurting?
I mean, I'm down over where I was last year, but I've made consistent gains, and I'm seeing this as like a really, really great buying opportunity. So I'm loading up the truck, man. There's a lot of companies on sale, and if we were to huddle back together in 5 years and take a look,
we should definitely do that.
Dude,
keep this one for the books. Keep this one for the books.
Yeah,
I'm putting 10 G's tonight.
Dude.
Yo, what if 5 years from now this podcast blew up and we're listening to this recording right now? And we're all millionaires from the moves because I went and bought a bunch of airline shit.
airline stock. Hey, but let me ask you this, Brady. What do you think is realistic return on your money? Because I'll tell you one thing. I met with a financial advisor maybe last year, 2 years ago, and he said that a lot of people in my position don't invest in the stock market because they feel that they can make their money grow with their own business instead of investing in 500 big corporations and getting a smaller return. They feel more comfortable that they can get their, if they have a solid concept and a proven concept that they can make more money on their own and have more control over that than just putting it on the market and then just being at the mercy of the market and these other people.
Yeah, for sure. So the reality is, if you own a business, there's two factors that you need to take into consideration before you invest. One is what we call return on invested capital, and then another one is what we call cash on cash return. You need to take both of those into consideration, because the reality is, when you put $1 in your business, you could pull out $1.80. Right? If you put $1 in the stock market and you have a great year, you're going to pull out $1.20. I think it's important to remember, though, your business, because it's a single entity, it's much higher risk. Whereas the stock market, as crazy as this sounds, if you buy into the market itself, it's a lower risk. So it may just be a way for you to diversify. But you absolutely have a point there. If you run a really well-run business, you're going to get a higher return. But if your business goes belly up,
if you have
it's going to hurt more too.
If you have an F-45 or an Orange Theory. You might be hurting right now.
Absolutely. Think about all the people that own gyms or personal trainers or professional waiters. There's some really nice restaurants in town. Think about the Angus Barn, right? A professional waiter at the Angus Barn is pulling $100,000 a year.
Right.
Now, you know how much they're pulling? Nothing.
Unemployment.
Yeah, nothing. So how do you maintain a lifestyle when you've been making $100,000 and you literally cannot get a job anywhere else without changing what industry you're in? So that's just it's something to think about.
No, I'm all about diversifying. I've always been a firm believer on diversifying, and with other, even if you're in business, with other concepts or other streams of revenue. And then always been a firm believer on passive income when I first heard it and what I understood what it meant. Residual and passive income. So the stock market is just one of those options. Even to go to furthermore and say, all right, I'm going to invest in a couple individual companies, but also on an index fund as well.
Yeah. Well, so it's the same idea that I was thinking of. Okay, if I have $1,000 and I put it on an index fund, it's a very sensitive thing to do, but I'm not going to make a whole lot of money in the next 5 years. It'll grow 45% in the best case scenario, or in a relatively predictable scenario, it'll grow 45%. But 45% of $1,000, I could have taken that $1,000 and bought 5 VHSs and resold them and make $2,000 in a year. So that's the idea. I think that the advisor was telling you, you have the opportunity to make your money grow further. But I think that I think after this podcast, I feel more confident about it makes sense to at least get my feet wet a little bit, to just for a matter of understanding it and being involved with it. It makes sense, even if I'm not gonna make a ton of money, even if it's just something that I play with a little bit and I'm okay with losing, just to understand it before something big comes along, right? I think it makes sense.
Yeah, that's on my bucket list. You know how you call it? It's I have to put some money on the stock market. That's something I always wanted to do, but I don't know. I never got the somebody giving you an advice or someone telling you actually how to do it. But there's some of the things that actually I want to do.
I think that's a challenge for a lot of people, Elias. I think that a lot of people are scared of being ripped off, and they're just trying to use whatever. I mean, think about it. A lot of people are working 40 hours a week, more than 40 hours a week, plus travel time and other responsibilities and commitments and kids and depending what you have going on in life. But there's, finding little pockets of time to do your due diligence and kind of investigate on. It's such, for a lot of people, some parents, have been in the stock market, and they have their people in place and they can refer their kids there. But a lot of kids are figuring out for themselves and for their families. They're the first ones going on uncharted territory and trying to learn. And they just, I think a lot of people don't want to lose money, and they don't want to get ripped off by somebody else handling your money. And I think maybe, Brady, that's why maybe some of these Robinhood and these apps have came about where,
Sure.
Look, you only need X amount of money, like a few dollars to start investing.
Right. Yeah, you got to start somewhere, and it doesn't really matter how small, but just getting in the practice of investing regularly. One thing we haven't really talked about, and I think we should probably touch on, is the concept of compound interest.
Mm-hmm.
So, like, when you buy something and it increases value over time, and then it pays in a dividend share that's then reinvested that buys another share that then is reinvested with its dividend and buys another share, it compounds. So the reality is, if you were to dollar cost average over, 40 years, so, that's a long time, but you're going to have, if you were to put in $500 a month for 40 years, you'd have millions of dollars.
Mm-hmm.
And a very small percentage of that is going to be actually money that you put in. The vast majority of it, over 90%, is going to be growth from compound interest. So, like, just
one of the wonders of the world.
Yeah, right. It's just insane, and that's what's great about the stock market is that over time you're going to capture that, and you're going to do it in a way that's incredibly passive. So, I own shares in Target, right?
Mm-hmm.
Have I ever worked at Target? No. Do I know what kind of specials they have coming up? No. I think it's a great company, and today it crashed 9%, and I think it's going to go down a little bit more. That's one I'm going to be looking at when it gets into the $75 range. I'm probably going to load up a truck and buy a bunch of Target, because I think over the long period of time, I'm going to make a lot of money on that, and it's going to compound. And when I'm 60 years old, I'm going to have a few $1 million worth of Target stock.
Right. No, and that goes back to like the whole business. Yeah, you can go and put your money in your business, put your effort, but there's also there's also a responsibility, and there's an opportunity cost with making a little bit more, but you're making that money work in your business versus diversifying and putting in the stock market. Where you're not losing sleep over a Target. You're not wondering who's working on the schedule or somebody called out from Target. That's a lot. That's not keeping you up at night.
Yeah, exactly.
You know what just dawned on me as you were saying that, Brady? The year over year, put in $500 a month. The freaking 401k. The 401k is the exact same thing, except you cannot take your money out until you're 65. But it's the same concept that they're in. 59 and a half or whatever. But or unless you want to be heavily taxed. But somehow that's been embedded into the culture where it's sensitive for you to have a 401k. And you should have a 401k and the companies match it or whatever. But why isn't it sensitive to invest in the S&P 500 over a period of time since you're 18 and just continually put money in there because it's going to go up and you're young and you have the rest of your life? Why is that not a thing? That's interesting to me that they sold us on this idea, and I don't know who they are, but I guess our culture or the way that it's set up, we've bought on this idea of a 401k. That's the right thing to do. But don't mess with the stock market. The stock market is, that's dangerous territory. That's for rich people. You don't get it. You don't understand it yet.
Right. Exactly.
Like,
the only time you ever hear about the stock market, unless you're rich, is like with some like get rich quick scheme, which turns out to be some horrible stock that has like zero to no like chance to make it. But that's when when somebody that has maybe not like all the resources, that's when they tell you like, here's the stock market for you. But a 401k, if you work for Verizon, you go ahead and make it a 401k. That's a sensitive thing to do. But why is not a S&P 500? I think
Yeah. So the reality is, a 401k is investing in the stock market. It's just a tax sheltered account. So there's a lot of different designations, and in the tax code, if you go open up the tax code and you go to section 401k, you're going to see it say that there is a type of account that will reduce your taxable income and will grow over time, and that you can take money out of when you're 59 and a half. The same thing applies if you work for like a nonprofit or a school. Then you're investing in a 403b. It's just another taxed advantaged account. IRAs are the same thing. Now, I will say there is a really special account that I love, and I do investing in every year, and it's called a Roth IRA. So a Roth IRA, it means I go ahead and pay taxes now on my current income, and then I invest. I buy ETFs in the S&P 500, and then that compounds year over year, every year until I retire. And when I pull that money out, I don't pay taxes at all.
Right.
So I could easily have, between me and my wife's Roth IRAs, we're gonna have millions of dollars in those accounts. And when we pull them out, we don't pay any taxes at all, because we paid the taxes before we put the money in when I was 27 years old. It's insane. It's totally unbelievable, because taxes are
you
going to
pay
eat away
the
at your
taxes
earnings.
you pay the taxes only when you put money in. That's it.
So I basically, I'm using dollars after I've received them.
After you've been taxed.
Yeah, after I've been taxed on it. So I'm already getting taxed on my current income rate, and I'm going to have a much higher income rate when I'm 60 than I do right now.
Oh, that's true, because that's a no-brainer. Because what you're making when you're in your 20s and 30s is not going to be your income when down the road.
Yeah, exactly.
You sneaky bastard. But here's the thing, man. Why don't they teach you this shit in high school?
Because you weren't paying attention, man. They did talk about it.
No, they don't teach you personal finance in high school or whatever.
Not personal finance, but they touch on this.
On that note, we should definitely do another one of these, because there's a lot more to be talked about. But that's over an hour, guys. Rambeer just popped a Michelob Ultra Light. So maybe we should do a back-to-back. But we've been doing this thing, Brady, that's like finishing thoughts, right? So, like, just finish up your idea, your aura, bring it all together, and just send a message to the world to be heard. And I'll start. I can get it going. Essentially, it's like, first, number one,
closing statements.
Buy all the toilet paper you can now. Number two, buy a bunch of stocks in Target. What else did you say? Carnival.
None of that.
And the airport.
Brady Johnson, hold him accountable.
And if you don't make a bunch of money, make sure you email him at. No, I'm just kidding. No, I think in all seriousness, I put that money in there. I'm very much an impulse person. I'm a very emotional person, and I am not calculative. But I've been trying to, as I get older, more and more, to be, a person who saves and invests and different things like that. If I took anything from this, is that it makes sense to at least be familiarized with the stock market. We are in a time in which it makes sense to buy. I'm going to try to look at things very much objectively and not from fear, and move from there, right? I think that there is some opportunity, and it is worth to do some research. It's worth to have this conversation. I'm happy that we did this, and I'm excited to invest all of my money on Target, Carnival, and the airlines.
There you go.
There you go.
If I could say anything, it would be going back. Perfectionism is the enemy of profitability. Keep that in mind. Everybody, I mean, I agree with Martin. It's better to get your feet in there and just play with a little something here and there. I think it's a great opportunity that I think a lot of people are intimidated of, and they're scared of the unknown, and they're not sure. Obviously, you're going to do this with money that you can afford to, that you don't need right now. And, but I think that there's a lot of opportunities out there. I think in the stock market, especially right now, March 2020. Well, let's see where we are April, May, and June. But yeah, I think that just getting in there. Another thing I think is really important is doing it automatic. If you can do this automated, it's one less thing to worry about, one less thing you have to do, but it's automatic every month. Even if it's $25, even if it's $50, whatever you can afford, makes a big difference than going to the bank and trying to remember one more thing to do to deposit in this account. But absolutely, Brady, thanks for coming on, man. We appreciate it.
Man, one of the
Yeah,
things
Elias,
I can actually,
what's your
one of the
closing statement?
things I can actually take home is like, yeah, thank you, Brandley, for sharing your knowledge with us and open that portal in our minds where it takes us somewhere else that we don't even know that we can go. I think. No,
Thanks for being in my mind.
one of the things like I gotta look into the it was a S&P 500, SPN 500 index funds and index and DTF funds. I think so. I gotta do some research on that, and I think that's kind of what I'm getting out of here. Like I gotta do some research and see what I get myself into. Hopefully, I don't lose any money.
Get yourself into trouble.
You gotta be okay with losing some money, I guess. That's what I gather too a little bit. Don't put money out there that you don't feel like.
That you need to pay your rent.
Yeah. Don't do that, guys.
Yeah, I think I'll be fine with that.
But Brady, you have anything to say before we cut this?
I would say the only way that you're going to win is by starting. And the best place to start is with your retirement accounts.
Mm-hmm.
So if you've got any accounts that have a tax advantage, either through your company or if you're self-employed or own your own business, you can do a self-directed IRA. Do something because it's going to pay off big, and you're going to be thanking yourself, in 30 years. So.
Mm-hmm. All right, Brady, appreciate you coming on tonight. Hope
Thanks,
you guys enjoyed it.
Thanks for listening, guys. We'll see you next week. Bye-bye.
Peace.